There is a moment, right before a major trend shift, when the market forces us to look past short-term noise and evaluate long-term structure. Staring at these charts today, watching Bitcoin test key historical zones, we are assessing whether current conditions signal a late-stage accumulation phase in this broader cycle. The technicals suggest we are moving through a critical value region, and that makes today's market update particularly significant. Before we dive into the data together, make sure to become part of our community. Subscribe to Crypto 101 Central, because analyzing these macro cycles together is how we build long-term perspective. And tap that notification bell so you never miss a decode when market volatility picks up. Welcome back, everyone, to Crypto 101 Central. Let me break down the charts. Currently, Bitcoin is consolidating within a defined price range, testing upper resistance near the high $60,000 region while finding baseline support in the late $50,000 zone. The upper boundaries around $67,000 represent a heavy historical supply zone, where previous rallies face selling pressure. If price breaks cleanly through that resistance, the next major structural zone lies around the $70,000 mark, where previous distribution occurred. History reminds us that breaking through established supply zones requires sustained volume. When reviewing historical market cycles, macro bottoms often coincide with elevated market stress and capitulation signals. We are observing early technical indicators of on-chain realization of losses as short-term holders adjust their positions. While this metric could expand further, historically, trading near or below long-term technical benchmarks, such as the 200-week moving average, has delineated multi-year value zones. Looking back at previous cycles, accumulating within these deep value valleys provided strategic risk-reward positioning before subsequent multifold expansions. From a pure technical standpoint, historical duration models suggest this consolidation phase could extend across coming weeks before a definitive macro reversal confirms. A retest of lower support bounds remains a distinct probability. However, entering these established historical support regions presents a disciplined environment for systematic dollar-cost averaging. We must also evaluate leverage distribution in the derivatives market. Current open interest shows a notable tilt toward long positions compared to short exposure. This positioning imbalance introduces the potential for liquidity sweeps toward lower demand zones, potentially retesting regions between the low $50,000 and upper $40,000 range. Managing position risk around these liquidity pockets allows for patient execution rather than reactive trading. Taking a look at market sentiment, while we remain in a cautious macro environment, extreme panic has moderately cooled. The Fear and Greed Index currently sits in a subdued zone, reflecting cautious sentiment rather than peak distress. In past cycles, sustained relief trends were verified only after sentiment indicators shifted back above neutral thresholds, confirming broader market participation. On-chain metrics further support this structural picture. The Bitcoin profit and loss supply distribution indicates a significant portion of circulating supply is currently held at an unrealized loss. Historically, when supply and loss metrics reach these relative levels, price action is typically navigating a broader bottoming structure rather than a mid-trend continuation down. Concurrently, momentum indicators on higher timeframes are displaying early bullish divergence patterns. Finally, observing the Ethereum to Bitcoin pair reveals an important macro setup. ETH/BTC continues to test a multi-year downward trendline. A structural breakout and higher low confirmation on weekly timeframes would mark a notable trend shift, historically paving the way for double-digit relative strength across alternative Layer 1 networks. Navigating these cycles requires a clear framework, patient capital, and rigorous risk management. If today's technical breakdown provided clarity for your market outlook, hit that like button to help Crypto 101 Central reach more analytical investors. Share your thoughts in the comments below. Are you systematically accumulating in these range boundaries or waiting for higher high confirmations? Thank you for analyzing these markets with us today. Make sure you are subscribed to Crypto 101 Central with notifications turned on, and check out our previous technical decodes to stay fully aligned with the broader cycle. As always, this channel documents, you decide.